afternoon. This is Rick Ackerman of Rick's Picks, and just like to take a quick look at the market. We've had a plunge today, which I described as refreshing. It's certainly a long overdue correction. We've had two good sell-offs today, about a 500-point down day today in the Dow and several hundred points yesterday. So we're finally getting places as far as the this long overdue correction. The chart in front of you shows why I'm very confident that the correction will continue. In the case of the S&Ps, they hit a low today so far. This is the E-mini contract of 28.74, but I think they're going to at least 28.36, which from here would be about another 500-point decline in the Dow. And I think there's a pretty good chance here that we're going to see 27.72. If that occurs, we've got another 1,000 points to fall in the Dow. Let me show you the actual Dow chart so we don't wind up interpolating numbers. I'm using this high up here to project what I call this is a kind of non-standard hidden pivot pattern. And the Dow currently 26,079, it just closed. Will be going, I think, to 25,363. So that is at least another 700 points below where we are. And one of the reasons I am really confident that we're going to get there is the way today's downtrend took out what I call the midpoint hidden pivot support. That's the red line here. And usually the first contact with that line is a good indicator of trend strength. So here, the downtrend demolished the presumptive support at that red line, and it gave us, I would say, close to 100% chance that we're going to keep coming down to 25,363. Maybe a little lower. You can see that there are opportunities here to play around with the pattern. I could start with a higher point A that would give us a target down at 25,276. All right, now, I'm probably as bearish as any guru out there on the big picture, and it's not like the whole world isn't aware that we've got a very dramatic slowdown, a recession in Europe, slowdown in China. U.S. manufacturing is slowing down. Consumption, consumer confidence is sold off sharply, and so has actual consumer spending. So a lot of things are going on, and as bearish as I've been, you might call me a perma bear. I still like to put the weight on my charts lest I use lest my instincts misguide me. So the one reason that I'm also confident that the market's not going to fall apart here, that it's got at least one good rally left in it, is this chart in Apple. And those of you who have been coming to these, tuned into these Facebook presentations that I've done, will know that I've been using a 242 target on Apple. That was looking a little better yesterday when Apple seemed to hold its ground against a pretty sharp market sell-off. But today, Apple just kind of followed the market lower, or perhaps, well, let's just leave it at that. It followed the market lower. But again, same idea here. You see, when I've drawn this big, this pattern, which I just realized I misdrew, but it'll serve just as well. It gives me a 243.68 target. And notice that the first time that this big ABCD bullish uptrending pattern hit that red line, the first day it did that, it blew right past it and closed significantly above it. So that's telling me that no matter how ugly things get in Amazon over the next few days or even weeks, that that it's eventually going to get to 243.68. Not only that, but the pullback to the red, well, let's make the green line to be safe. I'd be a strong buyer, an aggressive buyer in Apple shares if it pulled back to that green line. That would trigger what I call a mechanical buy signal. The actual number is at 205.36. Big trade, it implies a stop loss of about 13 points, $1,300 per round lot. So it's a $5,000 trade if you do 4 lots. So I'm not suggesting that for everybody, but just to keep track here. Again, as long as you're bullish, as I'm bullish on a bellwether like Apple, I think the market still has more upside left, and that is notwithstanding the fact that I think the whole world is coming unglued here in oh so many ways. That is about it for today. This wasn't a scheduled presentation. Typically, I do Facebook video presentations on Tuesdays and Thursdays, but because the market has made such a significant move, I thought I wanted to just give you my perspective. If you're interested in the hidden pivot method, in doing some of the same tricks that I do with these targets and forecasts, by all means, I would encourage you to come to the homepage. That's rickackerman.com. Just put your name up there, email address, click start my free subscription. No credit card necessary. You'll be given access for 2 weeks for free to all of my features and benefits. I might mention that if you've been in the chat room the last couple of days, you would have seen many subscribers made out, doubling, tripling. We had one guy here reporting that he made 7 times his money buying some puts in the diamonds. A lot of traders cashed in on that. I did put that out a few days ago to buy diamond October 4th, 265 puts. So a lot of good things like that happen in the chat room. It's a great place for discussion and real ideas. These are trading ideas and opportunities that crop up in real time. So again, to sign up for this, for full access, so you can get not only access to the chat room, but the trading recommendations themselves, the live recommendations on the front page. So rickackerman.com, name, email address, and just click start my free subscription. So that's about it for today, and I will probably be doing another one of these presentations tomorrow as scheduled. And until then, I will see you around, wishing you a very pleasant good day for now.